So if I was Mark Zuckerberg and watched these companies boycott for 6 months, I would just freaking let them. Facebook's stock, along with other social media outlets, have taken quite a hit in the stock market recently due to some controversial topics regarding what they allow and what they don't allow on their platform. It's created so much attention that over 100 companies have vowed to boycott Facebook and not place any ads with them through the end of the year. Here's why they're dumb and why you should be buying Facebook and other social media stocks right now. Coming up, hit that intro. What's going on, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I want this channel to help you own it in order to achieve that financial freedom you're searching for. And stay tuned to the end of the video, and I will give you a couple of other stocks that have taken a hit outside of Facebook and why I think they are steals right now as well. Oh my God, whatever is Facebook going to do, folks? The stock tanked from its recent $245 highs and opened up this morning around $208. The stock got hit with a double whammy on Friday. Get these whammies out of here. Guys, if you have any idea what those are, please give me a thumbs up. I was the only one on my team this morning who had any idea who they were, and it made me feel extremely old, so I would appreciate that. Anyways, with the stock market plunging due to spikes in Rona cases, as well as reports that over 100 companies have chosen to boycott Facebook ad spend on the platform, that was a double whammy that caused it to tank indeed. The boycott of advertisers on social media is gaining momentum, and Facebook is the primary target. According to the New York Times, marketers are expressing their distaste with how Facebook handles misinformation and, quote, hate speech, including its permissive approach to problematic posts by the president and many other political leaders. The boycotts are the result of a call by the advocacy group Stop Hate for Profit, which is keeping a running list of participating companies. Just this past weekend, Starbucks and Unilever said they would pause advertising on all social media platforms as they are the most recent companies to hop on this bandwagon. They were among the biggest spenders on Facebook ads, as Starbucks has spent $95 million on Facebook just last year. Other companies have boycotted Facebook specifically, including Honda, Levi Strauss, Patagonia, Verizon, Pepsi, Coke, and the list goes on and on. Procter & Gamble, who is the world's largest advertiser, said it would not rule out a pause on Facebook ads, but I'd be curious to see how this plays out. Its big rival, Unilever, is stopping ads on Facebook, Instagram, and Twitter through the end of the year. So could this be a huge advantage for P&G if they stayed in? Let me know in the comments on this one, because I'm curious about your thoughts. But here's why this is dumb in my opinion, and Facebook is still very much a clear buy. Let's just say that P&G doesn't join the boycott and keeps on with business as usual. Its competitors who are boycotting will likely suffer the most, and this will probably backfire on them too. I mean, Starbucks can't afford this as it is. They've already shut down 400 stores recently, and then they do this to themselves. And before I go any further, guys, and I get all the hate comments on this about being insensitive or what have you, I get it. I understand the why. But in my opinion, from a business standpoint, there are better ways to get a message across, and this just isn't the way to do it. When you think about the rate of return you get from advertising on Facebook, it's absolutely insane. And the reason for this is because the way that Facebook targets people who are most likely to buy a specific good or service. When you target someone who's actually looking for a product you are selling, they are much more likely to buy it. It's a lot like when Jordan Belfort asked Brad, not this Brad, to sell him a pen. Take a look.
Sell me that pen. Watch. Go on.
Let me sell this pen. Why don't you do me a favor? Write your name down on that napkin for me.
I don't have a pen.
Exactly. Supply and demand, my friend.
You see, that's what Facebook does. They actively target people who are well in need of that metaphorical pen. This is an incredible advantage for businesses and way more powerful than something you would see on a TV commercial or billboards, for example. So if I was Mark Zuckerberg and watched these companies boycott for 6 months, I would just freaking let them. I mean, sure, it may make a small dent in Facebook's revenue, but there are way more businesses rolling into Facebook even now than they are rolling out. It's damn near insufferable for your business to not be on this platform, especially for 6 months. Are you kidding me? There are 8 million other businesses on Facebook, and I seriously don't think this impacts the valuation of Facebook in the least. They have been an absolute godsend to small businesses in the wake of the Rona, and I don't see any kind of mass exodus happening whatsoever. Not only that, but just today, Facebook announced that they are expanding the availability of the tools it offers to help game streamers and other online creators make money. People like me, which is a pretty nice thing. Facebook first launched fan subscriptions in early 2018, giving a small group of creators in the US and the UK the ability to charge their fans a $4.99 monthly fee for exclusive content and a fan badge for their profiles. Kind of like what you already do here on YouTube, which, if you're not a part of, be sure to click that join button if you're interested in getting my own sweet-looking custom badges, as well as a daily watch list every single day before the market opens. If you were already there this morning, you would have already been pretty darn green on Facebook by now, so go check it out, and I would love to see you there. Look, after all this, I think it's safe to say that Facebook is very much a buy for me still, and I still think that we see $400 on this stock by the end of the year. Now, as promised, there have been some other social media stocks that have taken a hit as a result of this boycott, and some really great opportunities, in my opinion, to buy on the dips here as well. First off, there's Pinterest, and admittedly, this is probably my favorite stock as far as social media is concerned outside of Facebook. Ticker symbol PINS is priced around $21.50 as of this recording, and I think it's a steal to grab this dip from its recent $24 highs. Monthly average users and revenue increased 26% and 51% respectively in 2019. Global monthly average users increased another 26% year over year in the first quarter of 2020 to 367 million. In international markets, which make up 3/4 of the monthly user base, average revenue generated per user increased 76% in the first quarter, and that's compared with the average revenue per user of $2.66 here in the US. The company saw a 35% increase in revenue to $277 million in the first 3 months of the new year. Now, while guidance for the full year of 2020 was pulled due to issues surrounding around the Rona, that increase was actually a pretty incredible start. The recent surge in all things digital bodes pretty well for Pinterest and suggests that the company will remain a very positive outlook, in my opinion. If not with revenue growth, then at least with new users, which is always a good thing. The company did say that growth revenue of its platform in 2020 centers around content, adding new cases, diversifying types of ads it supports, and adding shopping to its social discovery platform. Of course, some analysts are stuck on the fact that Pinterest still operates at a loss, and it still may be a while before they start to operate in the black. In fact, while no specific guidance was given, management warned that its cost of revenue increases with the number of users, not with revenue itself, and that operating expenses are expected to rise this year too. But here's the good news, in my opinion. While it remains in user adding but loss generating mode, Pinterest is well funded to support its expansion. The company has $1.74 billion in cash and marketable securities and zero debt on its balance sheet at the end of March 2020. That is amazing, and that is huge. If you back out the non-cash line items from Q1 and the annualizing the figure, the balance sheet has enough liquidity to cover a year's worth of costs and expenses. That is a sign of amazing health with this company, folks. Not only that, but then there's the valuation. Since profits are intentionally non-existent for the moment, investors are left with price-to-sale ratios. Currently, at the 9.7 trailing 12-month revenue, the visual research platform is valued roughly at the same as Facebook is, which is at 9.2 times trailing revenue. And they're actually lower than Match Group as well, which is at 12.3 times trailing revenue, even though Pinterest is growing its top line at far faster pace. In my opinion, I think that Pinterest is very much a buy, and I think that we could even see around $30 to $35 a share before the end of the year. Next, there's Snapchat. Ticker symbol SNAP took a hit as well, falling from nearly $25 a share all the way down to $22 on the boycott news. And I think this is also a great opportunity to snatch some up on this dip. Snap has actually been benefiting from a spike in usage on Snapchat. The strong adoption of augmented reality lenses discover content and shows it's driving user growth. Most recently, Snap has unveiled augmented reality shoe try-ons this month. Now, Gucci has become the first brand to step into the new tech, with Monday's launch of its footwear-friendly Snapchat AR lenses. The luxury brand created 2 lenses showcasing 2 pairs of its latest shoes each for a total of 4 styles: the Gucci H, the Gucci Rhyton, Gucci Tennis 1977, and Gucci Screener. Snap is still growing in popularity, believe it or not, particularly among the 13 to 34-year-old demographic, and is expanding its advertiser base and creating space in the market with its competitive position. How huge would this be for the fashion industry, and who knows how else this will play out? From the technical side of things, the stock has moved higher by 39% in the past month, while it's also above its 20-day SMA line too. This combination of a strong price performance and favorable technicals could suggest that the stock may be on the right path to continue to go higher, in my opinion. So what are your thoughts on today's video? Do you agree that this is going to be more detrimental to those boycotting, or do you think this is going to really impact Facebook as a company? Also, let me know about the other stocks that I mentioned as well that took a hit. Do you like those opportunities as well? Let me know in the comments below. And if you happen to miss out on last night's record-setting Stock Watch Sunday, click this video here. It was absolutely incredible. Or if you happen to miss the video where I shared why I invest in the stock market and I was away from my office, had a cigar in my hand, and just had a genuine conversation with you, click this video here. And as always, folks, I will see you all before the bell, and B Smith is out.